This is Eric Muathe, themuathe.com. After the close, March 17th, 2009, after 178 point close higher for the Dow. I'm sure it surprised pretty much everybody, especially those who are short. After yesterday, the market gave back all its gains. It seemed like the best thing to do and the most obvious thing to do was to go short because the market was giving back its gains. The market was overdue for a corrective sell-off, but probably that trade was too obvious that it didn't work. The close was not a big surprise, really. If you followed me on Twitter, I did point out the reasons that would enforce the idea of a market being up just like it did. I mean, the mathematics of it were pointing to the risk being that if you are short, you are going to be caught up in a massive rally into the close, just like you saw it, into the close. In this video, I'm going to show you reasons why you should not rush in and join the rally on the upside. And I'm also going to show you a few charts that will, if somebody was to tell you, do you want to buy long or short positions here to hold for 6 months, would you go long or would you go short? And sure, the market has moments where there are going to be days when money is going to be made on the short side, and there are going to be days when money is going to be made on the long side. But the real idea here is that in 2007, 2008, we saw a market that was trending lower, no doubt about that. And the question now is, do we continue seeing that kind of a market that trends lower, or have we reached a point in the coming, if you put the next 6 weeks, 6 months, are we going to be trending higher? And that's an important question. So I'm going to show you some charts, worldwide charts, that might be pointing out and might help us figure out what that entails long term. I'll also have initial part of this video is going to be free. The rest of it is going to be for my subscribers for obvious reasons. It's not that I ain't mad at you. I got nothing but love for you. So like we take a look at the Dow 1 year daily chart. What we see here is, and the reason why the Dow was up 2.48% is because the daily RSI moved from below 50 and closed above 50. Right there, it's very simple. That's the reason why mathematics dictates when you move above 50, close above 50, you have a huge introduction of a huge number, and that's why the market was up today. And I talked about that on my Twitter blog pretty much since yesterday's close. And so now what we're looking at here is maybe the Dow might have an opportunity to test this price channel top lines, an opportunity to do that or not. And also we see that it eventually has to contend with this RSI top lines. And I've also noticed, in this market, the very strange thing is just the moment you take home your biggest gains for the day is when you should have taken your profits. So guys, take profits, and let's start considering the opposite side of this trade. This trade has come too far too fast. If you take a look at the Nasdaq 1 year daily, yes, we broke above this price channel, okay, which is really good. It gives the market, means that all this steep sell-off energy is now probably being washed out. But now again, we walk straight into 50-day moving average resistance area. Trust me, the market is tough, man. It's like you can't get out of. If it's not one thing, it's the other. But anyway, so the Nasdaq right here is gonna contend with its 50-day moving average. By the way, I got a warning. This is gonna be a long video. I got a lot of charts to talk about here. So we have to contend with this 50-day moving average. Okay. Number one, good thing we got out of this price channel. Which means that the market is now, at least this action here, is pretty much the speed of selling has reduced as of this close. Also watch that now we are testing this RSI top lines. This is an area where we might stall. And that's why I say please do not be too aggressive on the long side. If you have nice profits, take them. And then we're going to start having to look for opportunities at some point to start putting on some short positions. And I don't know, and these short positions are not going to be for the long, for holding for a while. It's going to be in and out. Why did the Nasdaq rally 4% for the day? Again, the reason is because the Nasdaq closed with its RSI below 50 yesterday, and today we see a huge slashing of the 50 level, and we closed above this. That's why you had a huge percentage gain. Take a look at the S&P 500 here, and what we see, this is a 1-year daily. Again, the same scenario, up 3.21%. Huge day. If you were short, you felt some pain. And the reason is because this right here, we moved above 50 on the daily RSI. Again, we have to contend with this RSI top lines at some point. Whether that starts tomorrow or at some point this week, I do not know. If we take a look at the Dow Jones Transport, now we are back at this resistance level here that has been resistance going back to January this year. Resistance here, here, and here. So again, after this huge move in the market, somewhere around here we might start seeing this market pull back, which would be a normal pullback. Again, watch where this instrument closed for the day, which is how you know you might be walking into a sell-off. This right here is very tricky. Means today if it clips back below 50 right here, you have a sell-off in the market. Okay, so just be careful for that. So that's that. And again, somewhere around here we are going to be trending lower. One of the instruments that actually is making me start getting some conviction over many weeks, over many months, that this market might be trending higher. Okay, and don't be surprised if you're catching my videos for the first time. I've been considering the idea that maybe we are so negative that this is when we start putting on some long positions, just like traditional buy and hold died in 2007 and 2008, but maybe this is when we start getting the traditional buy and hold idea coming back in the market, when nobody considers that as an investment strategy. So when everybody is not considering it, we might want to consider it, because when it was very obvious that people need to buy and hold stocks, maybe that idea became too obvious and it did not work. So let's try and sometimes do the opposite, because this is really an opposites game. When most players expect something to happen, it doesn't happen because everybody's already expecting it and you probably acted upon it. But one of the markets that's giving me pause and for the long haul, what's going on in the market over a long considerable period of time, is this instrument here has moved from, let's say, $20 just since July of last year, and almost like a straight chart all the way to 250. Anyway, sorry about that. I had to pause the video for a moment there. But anyway, so this chart right here, I mean, straight move from $20 all the way to 240. And now for the first time we are breaking price channel support right here. We see the 13-day moving average might be crossing under the 50-day moving average. So we start seeing some sell signal, very, for the first time in many months, this instrument is breaking down. And more importantly, if you take a look at the daily RSI, you see this is a huge, especially with the follow through to the downside, this is a huge break on the RSI support. This what I say is a change in sentiment right here with this break. Especially we have a follow through, it's gonna be something in the market is changing. And if you take a look at DTO from a weekly perspective, if you take a look at it from a weekly perspective, what you see is this, weekly chart, the trend for the first time, this line here has been broken this week. So we see a change in sentiment for sure. This market is changing its stripes. If you take a look at the weekly RSI for DTO, you are seeing an all-time RSI lows.